Money is pouring into real estate. What does that mean for homebuyers? It is around 10 at night. A middle-class family is sitting at the dining table. The laptop is open in front of them, property apps are open on the mobile, and only one question is going around in their minds. Should we buy a house now or wait a little longer? From the outside, it looks like just a family discussion. But in reality, it is the story of a big change that is quietly happening in India's real estate market right now. The fear is that prices may go even higher. The curiosity is about why so much money is suddenly coming into this sector. And the story begins here. When big global funds, private equity firms, and institutional investors start backing the very sector that was once known for delays, disputes, and distrust. Until a few years ago, the moment property was mentioned, the common person had mixed feelings. On one side was the dream of owning a home, and on the other were builder delays, legal risk, possession uncertainty, and the pressure of EMI. But the beginning of 2026 has shown this sector's picture changing. According to 𝐟𝐨𝐥𝐥𝐸 India, private equity investment in India's real estate sector reached around $1.2 billion in the first quarter of 2026, which was about 66% higher than the same period last year. In other words, big investors have clearly signaled that they see growth in India's property market. And this confidence is not limited only to luxury towers, but extends to office assets, residential demand, and emerging cities as well. Now, the most important question here is, what exactly is private equity or PE? In simple language, this is not the small investment of an ordinary person. This is the money that is invested by large funds, pension managers, insurance pools, global investment houses, and institutional investors. Their game is played at scale. They do not invest in one flat, but in an entire office park, township, logistics park, commercial platform, or real estate services business. Recently, London-based global investment firm Permira made its first deal in India by investing around $100 million, or more than 925 crore rupees, in 𝐼𝐸. This is not just money going into one company, but a message that global capital is now looking at the Indian real estate ecosystem as a serious opportunity. But an ordinary homebuyer may ask, what does that do for me? My question is simple. I need a house, I need a good location, I need it within budget, and I need possession on time. This is where the most important turn in this entire story comes. When large institutional money enters the sector, builders have to struggle less for funding at every step. This directly affects the project pipeline. New projects get launched, designs improve, pressure on construction quality increases, and the ability to complete work on time also becomes stronger. Big investors do not do charity. They want discipline, timelines, and governance. And this same discipline often becomes a hidden advantage for the homebuyer. Behind this boom, there is not just money, but also the story of policy and infrastructure. Metro expansion, expressways, industrial corridors, airports, city connectivity, and the expansion of business districts in India have changed the demand map of real estate. Earlier, the growth story was believed to be limited only to metro cities, but now that same momentum is being seen in Tier 2 and Tier 3 cities as well. Different industry reports are indicating that, because of the infrastructure push, land prices and housing demand may rise rapidly in many smaller and mid-sized cities in the coming years. This means the future of real estate is no longer just the story of Mumbai, Delhi, Bengaluru, or Hyderabad. New growth pockets are emerging where both buyers and investors are looking for opportunities. And this change is not just imagination, it is visible in demand data too. India's office market recorded record activity in the first quarter of 2026. According to CBRE, office absorption in Q1 2026 reached around 21 million square feet, and GCC leasing also touched record levels. The direct meaning of this is that companies are taking office space again, expanding, and in many places the relevance of the physical workplace is becoming strong once more. Office vacancy rates too have begun reaching some of their lowest levels in top cities after the pandemic period. Now when office clusters grow and jobs increase, the effect is felt on rental demand, residential demand, retail activity, and civic infrastructure in the surrounding areas. In other words, the story of offices is not separate from the story of housing. That is why the mood of the market feels different for residential buyers today. When a new office corridor comes up in an area or an existing business district expands, then the demand for flats, plotted developments, rental housing, and mixed-use projects around that area also increases. Many families are no longer looking only at today's house, but at tomorrow's location. Which expressway is coming, which metro route will be extended, where airport connectivity will come, where jobs will be created. These questions have changed the way people buy homes. Now the buying decision is emotional, yes, but it is not purely emotional anymore. Data, connectivity, future livability, and resale potential have also become part of it. Then comes the question of trust. The biggest old problem in Indian real estate was not just inflation, but the trust deficit. This is where RERA tried to change the game. The Real Estate Regulation and Development Act, 2016, was meant to bring transparency to the sector, protect consumer interest, formalize project registration and disclosures, and create an institutional system for dispute redressal. It would be wrong to say that every problem has ended. But it is equally true that after RERA, buyers now have more information, more legal framework, and more accountability tools than before. When regulation and institutional capital work together, the sector gradually becomes more organized, and the buyer's perception of risk begins to change. Yes, it is equally true that a boom is not always a blessing. Money pouring in does not mean everything has become easy for every buyer. As demand rises, projects in good locations can become more expensive too. In Tier 2 and Tier 3 cities, where the infrastructure push is stronger, the possibility of land prices rising is also being pointed out. This means that a buyer who stays in waiting mode for too long may face a higher entry cost. On the other hand, buying in a hurry just because of hype is also not free of danger. So in this market, the biggest advantage will go to the buyer who moves ahead carrying both excitement and caution together. Another major factor is interest rates. Buying a home is not just a matter of property price, but also of EMI psychology. In April 2nd, 2026, the RBI kept the repo rate unchanged at 5.25%. The effect of this was that a kind of stability remained around borrowing costs and housing sentiment got support. But the other side of the picture also has to be seen. According to Reuters reporting, because of West Asia tensions and oil price risks, inflation pressure could rise again. This means that today, rate stability is supporting buyers' confidence. But tomorrow, if inflation rises sharply or borrowing costs come under pressure, the affordability equation can change. That is why a smart buyer does not look only at today's EMI, but also at their repayment capacity over the next 5 to 10 years. Now think about it. A builder has strong funding, regulation is better than before, office demand is strong, infrastructure is expanding, and investors are entering the sector. In such an environment, what benefits can buyers get? The first benefit, options. When supply increases in the market, many formats come up like 2 BHK, 3 BHK, plotted development, integrated township, gated community, and mixed-use projects. The second benefit, the level of amenities rises because competition increases. The third benefit, pressure increases on construction timelines. The fourth benefit, because of bank and institutional due diligence, some projects begin to look relatively more credible. And the fifth benefit, if you choose the right micro market, then along with living there, you may also get asset appreciation and rental support. But there is also a human side to this story, which headlines often forget. Behind every rising graph sits a family with a calculator, adding up EMIs. There is a working couple wondering whether they should keep paying rent or now buy their own house. There is an elderly father saying, "Son, a house is your own roof." There is a young professional who wants to buy a small flat close to the office so that the commute gets shorter. In other words, real estate is not just a game of capital, but also a game of aspiration. That is why when big funds enter the market, the news is not only about billions of dollars. Its effect gradually reaches the decisions of lakhs of households. So, should everyone buy a house right now? No. It would be wrong to give such a direct answer. If you are an end user, your job is stable, your emergency fund is separate, your EMI does not put too much pressure on your monthly income, and the property is RERA registered, legally clear, and in a livable location, then this market can offer you more structured opportunities than before. But if you buy only because of FOMO, in the mood of everyone is buying, so I should too, then this same boom can later become a burden. In real estate, the right decision comes not from excitement, but from patience. The most interesting part of this whole story is that India's real estate market is standing right now with two faces. One face is that of opportunity, private equity inflow, office demand, infrastructure growth, organized regulation, and expanding cities. The second phase is that of warning, rising prices, affordability pressure, location risk, overhype, and macro uncertainty. There is benefit for the home buyer, but it is not automatic. The benefit comes only when the buyer understands not just the brochure, but also the balance sheet, not just the sample flat, but also the surrounding ecosystem, not just the launch offer, but also the long-term value. Because the sector that looks booming today can tomorrow create both winners and trapped buyers. And perhaps this is the biggest truth of this phase. Money really is pouring into real estate. Big names are coming, big deals are happening, and new maps are being drawn even beyond the big cities. But the real question is still the same one that the family sitting at that dining table was asking. Is this boom an opportunity for me or a trap? The market will not give that answer. The buyer will have to answer it themselves by looking at their own needs, their own income, their own city, and their own timing. Because in property, the most expensive decision is not always the one you took. Many times, the most expensive decision is the one you took without understanding it. If this video has taught you something new, or if you feel this information should reach more people, don't forget to like and share the video. Your small share can become valuable and useful information for someone else. If you have any questions related to this topic, or if you would like to share your opinion with us, be sure to write in the comment box. We read every question and suggestion from you, because your feedback inspires us to create better content. And if you want to keep receiving such interesting and reliable information about business, the economy, and the world in the future, then don't forget to subscribe to our channel GRT Business and also press the bell icon so that you get notifications of every new video directly. At GRT Business, we always strive to provide you with accurate, balanced, and reliable information. Our news and analysis are prepared based on information obtained from various news agencies, public sources, and public opinion. We make every effort to verify and validate each fact as much as possible. But in case of any possible error or dispute, the responsibility lies with the respective sources. Our only aim is to present you with a correct and trustworthy perspective so that you can understand any topic better.